And when we look at these users of the accounting system, we're looking at investors. So who are the people who are making equity decisions? We look at creditors. Who are the people who are either interested in providing credit to the company through accounts payable or vendor terms and conditions, or perhaps buying bonds that the company may issue. We look at management, who's also interested in the performance of the company compared to budget. We are also looking at external agencies such as the Internal Revenue Service, the Securities and Exchange Commission, and other organizations that we're required to adhere to certain compliance and reporting standards against. And then obviously we want to look at the society and community within which the organization operates and what might be expected of that organization by the members of society or the local community, and what's necessary to report in order to understand whether we're meeting those expectations. And so practically everything we do anymore with respect to accounting involves some component of information technology or IT. And so having some background and some awareness of the integration of those two disciplines, or as the text puts it, where these crossroads meet, is important to any accounting professional in today's economy. And so when we think about an accounting system, the book has given us this mnemonic, SASSY. We think that accounting information systems are used to store accounting data using people, processes, and technology, to analyze that data so that we can create intelligence to help better inform the business decisions we have to make to safeguard that information, since those are really assets of the organization. And then the system itself, we need to understand the design of it so that we can incorporate that into the form and fashion that we would recommend as system analysts and developers for the accounting system. And so this just provides us with a visual of how the text is laid out. So through part one, we'll talk about enterprise accounting systems and the different components of them, like accounting databases. So inherent to accounting databases, we have forms, queries, and reports. And so what are those and what are the differences? And then we'll look at some business processes and how the accounting system overlays on those business processes. In part two, we'll talk about this idea of business intelligence and what that means. That's a very hot trend in business now. Then in part three, we'll talk about security controls and risk. That too is a hot trend, this idea of cybersecurity and how does a company protect one of its most valuable assets, that is its information system, from intruders. Then we'll talk about a little bit about in part four, the design and developing accounting systems. And then finally in part five, we'll summarize all that we talked about this semester thus far. And so when we talk about the accounting systems, we're really looking at three aspects to it. One, we store accounting data, and that's in generally a relational database. We have to have output from that database through the form of reports and queried information so that we're able to analyze the accounting data, which often involves this idea or the application of business intelligence analytics. And then it's very important within the framework of both of those items to protect that data or safeguard it from unauthorized access and use. When we talk about the accounting system, we have to recognize that sometimes this accounting system is a part of a larger enterprise system. And you may recall we talked about this a little bit earlier in our first session about systems thinking, and that accounting systems can be thought of, or systems thinking can be thought of, as a group of interrelated components. So when we think about an enterprise system, the accounting system can be a portion of that or a component to that enterprise system that is along with the human resource system, along with the project management system, along with the supply chain management system. There can be multiple components in that. We can also scale that down to say that the accounting system is the system we're looking at, and that the components to the accounting system are the accounts receivable component, the accounts payable component, the payroll component. So you can see this idea again of systems thinking with respect to accounting systems is scalable. And so now we want to talk a little bit about how the accounting system at the high level is a part of an enterprise-wide system. And the modules in that enterprise system could include modules such as, or components such as the accounting information system, the supply chain management system, the operations or production system, the human resource management system, or customer relationship management system. So there are multiple components in an enterprise-wide system. And the ideal enterprise-wide system integrates all of these components so that there's value added associated with all of this integration and in the output of the integration. And we've optimized our system once we've gotten to that point. And so here we talk about the three functions of an enterprise system, and those include the input, which capturing information to store with respect to any one of the modules we just talked about, processing that input, and that is making it processing it and configuring it in a way that has value added to the users, and then the output of that information or that processing, which is summarizing the information to generate reports. And so again, we say that an enterprise system, an integrated enterprise system, shares data across multiple functional areas. And we can see here that in this view and in our idea of general systems thinking, we can see that accounting is one of the components, along with the supply chain management, the operations and production system, human resource and client relationship managers. So within the boundaries of our enterprise system software, we have these components. And we can also see that the users of that information include the vendors and accountants, the management of the company, employees, and oftentimes our customers. And so here again, we just talk about the three functions of an accounting system and remind ourselves of those. And so to understand an enterprise system, we have to first understand the underlying business processes. And when we talk about a business process, we're talking about related activities performed by an organization to create value by transforming input into output. So that business process may be the billing function, for instance. So we capture job cost information, we process that job cost information, and one of the outputs, along with project cost reports and profitability reports, should be the invoice going to the client. And so that's a part of the accounts receivable, because after we've processed the invoice and sent it to the client, it becomes a receivable, which we track until we receive cash against it. The enterprise value chain is an organizing framework for business processes. So when we're talking about these business processes, they're all interrelated and they all overlay multiple different silos of activities. And that we want to optimize how these processes interact across those silos of functions so that we create this value chain. And so again, we talk about a value chain, which is really the series of activities that create value. And part of what we do as accounting information systems designer is to look for innovative ways of integrating these functional areas so that we can increase the value to the organization. And so this is just an illustration of how the accounting system will cross over the functional components of the value chain. And if we look at this value chain, which starts with vendors whom we buy products from to make our product or incorporate into our product, manufacturing, which we then sell and then support to customers. The accounting system overlays all of those functional activities through the purchasing cycle and supporting the purchase, the issuance of purchase order, the payment of vendors, through the make or production cycle by processing payroll. It may involve fixed asset accounting, so there are multiple accounting functional areas involved there, and then supporting the sell and support function through the interaction with the customer relationship management cycle or component. So we can see that this idea of wanting to optimize or create as much value across all of those functional areas through the accounting system value chain, we can see that represented here. And so when we talk about this idea of transaction cycles, we want to notice how the accounting system is interrelated to the other subsystems. So for supply chain management and purchasing cycle, we have operations and payroll, we have customer relationships and the sales cycle. Also notice how the accounting system spans the entire value chain. And so the purpose of this slide is to help us to get comfortable with and to familiarize ourselves with this idea of a baseline accounting system. The baseline model is an overview for the entire accounting system, and it typically consists of the following modules that most enterprises use. So we have a vendors module, a customers module, an employees module, and a banking module, a financial module, and a reporting module. And these are generally part of the baseline accounting system, which has some level of functionality, what we call off the shelf, so that we don't have to create everything from scratch. So there's some built-in baseline functionality into the baseline accounting system, and that built-in functionality within the baseline system is meant to incorporate these functional areas such as vendor management, customer management, employee management, banking, finance, and reporting management. And this shows some of the typical transactions that are related to each of those functional areas. So for vendors, we create purchase orders. When we're buying goods from them, we receive the items, and we enter the bills, and then spanning into the banking function, we then pay the bills. In the financial function, we may have to make adjusting journal entries, or we certainly have management reports that come out as a result of those vendor transactions. We see the same if we skip down to employees. So employees enter time, the payroll department will calculate payroll, they will pay employees, and then they will pay payroll liabilities such as medical benefits or tax deposits, and etc. And so again, that process of paying employees may involve adjusting entries, correcting entries, closing entries, and it will certainly generate financial reports such as tax reports. And we'll talk more about this idea of sustainability reports as we get toward the end of the semester. And so at a glance, we can see the transactions that make up the transaction cycle, and those would be purchasing cycle, sales cycle, and payroll cycle. Notice too that some call the purchasing cycle purchasing transactions or purchasing transaction cycles. The sales cycle is sometimes called sales transactions or sales transaction cycle, and the employee cycle may be referred to as employee transactions. And so again, we can see how these cycles, these accounting related cycles, overlay the different functional areas such as vendors and banking in the baseline accounting system. And we'll split these down when we're talking about them later so that they're more manageable when we're talking about the types of accounting information systems concerns we have about these. We also do this kind of splitting down of cycles when we talk about audit. And if any of you have had audit courses, you know that we cycle audit specific business functions so that we can conclude on the results of that auditing with respect to the specific accounts that we're looking at in that cycle. And so we'll talk about our information systems design with respect to certain cycles, since there are some unique components to each of those cycles that we need to take into account. So once you have a baseline accounting system, you can customize the baseline system to fit the enterprise-specific needs. An easy way to remember this again from the book is A, B, C. So the accounting system A equals the baseline system B, which we just talked about, and the functionality inherent to the baseline, plus C, or the customized system. And these are generally functions within the accounting system that have to be customized to meet our specific user needs. That is, they're not functioning to meet our needs right out of the box, right off of the shelf, like the baseline system generally is. So when entering accounting information into an accounting system, debits and credits are not usually used. Typically, debits and credits are used for journal entries, but only to make adjustments and corrections. And you'll notice these throughout our presentation. If this accounting insight provides a number, that's not really important for our purposes for this class, because some of the insights were really not, in my mind, relevant. They're discussed in the text. I encourage you to read them and understand them and be comfortable with them. But for what we're talking about each session, some of those insights I've removed. And so the next insight, as we talked, was that we generally don't enter debits and credits. Instead, accounting information is typically entered using on-screen forms, which is related to a database, and we'll talk about that, such as on-screen checks, on-screen invoices, and purchase orders. When we enter information into an accounting system, almost all accounting systems use databases to store the information. We may never see the database on screen or have any indication that the accounting system is using the database. And what we're using there when we're entering this information are forms, which essentially are more intuitive, user-friendly ways of entering data into a system database than otherwise employed. And if you're familiar at all with Access, you know that you can easily develop forms. Access is just another Microsoft database, but you can easily develop forms that make the entry of the data more intuitive for the users. And that's really what we're doing with the preponderance of any accounting information systems databases. And then we look at these categories of accounting software. So if we're a small business, we're not going to spend the amount of money it takes to buy some of the very large-scale enterprise systems. And so we're a small business. We might look at something like QuickBooks. Probably many of you have had experience with QuickBooks or Peachtree. Even once you get into SAP Business One, which is a scaled-down version of their enterprise-wide system, you're talking generally some expensive dollars. Then as we continue to grow into the mid-size enterprises, we can scale up the QuickBooks up to something more that's enterprise user-friendly. Again, the SAP or SAP Business All-in-One, and then we have Oracle's J.D. Edwards Enterprise One. Again, these are just databases that are more robust and have more functionality that a mid-size enterprise might need, but that wouldn't be worth the investments for a small business. And then as we move into very large-scale enterprises, we look at products like SAP and Oracle, which are the preeminent large-scale databases, relational databases available in today's market. So it is important that if we're going to design databases or design accounting systems, that we have some understanding of what a database is, what are its components, and how does it work, and that's what we'll talk about next. So the keys to understanding databases are to understand fields, records, tables, and the database. So a field is just pieces of information about events, people, and objects. So a field is nothing more than a piece of data in the database. A record is a collection of these related fields. So perhaps if we take an example, an accounts receivable record, the pieces of data might be the customer name, the invoice number, the invoice date, the invoice amount, the mailing address. Those are the fields related to the accounts receivable database. The record is all of these fields combined together to give us information about that customer and its open invoices. The table is all of those records combined, and then which is a collection of records in a unique table, and each table has a name in a database. And then the database is the collection of all these related tables. And so you can see the interconnectedness in how each of these components builds on the other. So a record builds on a field, having multiple fields in a record. A table builds on a record, having multiple records in a table. And the database builds on the table, having multiple tables in the database. One easy way to think about how databases function and how to design a database that is useful is to begin by thinking about how the information will be used. So instead of starting with the inputs that will go into the databases, we want to begin by thinking about the outputs that will be required from the databases. So what reports will the users need? For example, if you need to email all your customers in a specific zip code, you will need to be able to sort by zip code. So this is a starting point for identifying the fields that the databases need to have. We need to think about, keep in mind what our end result needs to be in designing the database before we get to the design phase. So here we're kind of looking at the difference between a spreadsheet and a database. But visually we can understand that they can look alike. So if we look at this presentation, we can see that the customer number is a field, the last name is a field, the first name is a field, and so on. That's looking columns, looking at the columns. If we look at the rows, we can see that all of those fields together constitute a record about a certain customer. And so if we're looking at this in a spreadsheet, we want to keep in mind that there are two-dimensional databases, right? Where they have columns and fields, columns and rows, fields and records. So a spreadsheet is a two-dimensional database, but it's not a very robust database. Databases use database tables that add a third dimension. So databases are three-dimensional. Imagine layering or stacking the database tables as we see here. Spreadsheets permit you to see both dimensions on the screen. Databases with three dimensions often require you to mentally visualize the database rather than being able to see it on the screen. Accounting systems typically use a relational database to store accounting data. Relational databases are database tables that are related or connected. The database tables are connected to each other through common fields that appear in two or more tables. Each database record must have a primary key. The primary key is a unique identifier for each record in a database table. The unique identifier is required to be able to identify and retrieve the records. For example, if you use last name and you have two Smiths in the database table, how would you be able to retrieve the correct Smith? Notice here that the customer table uses a primary key of customer number. The order table also contains a field for customer number. Customer number is the common field that connects or relates these two tables, the customer table and the order table. Also notice that the order table has a primary key, which is the invoice number. And so again, what we're looking at here are two different database tables, and the connection between the two tables is customer number, because we see that in both fields, right, in both tables. And then we also notice that there's a order table which has a primary key invoice number, which is also used as a primary key in another table that would relate to this table. And so this is this idea of primary key and what connects individual tables with one another within the database. And so if we go back to the database essentials, we see that we're talking about, again, database forms, which are online forms used to facilitate the ease of entry. We see database queries, which are used to search and inquire into the database for information. And then we see database reports, which may be the query in report form. It may be a report written for specific purposes, but it's meant to, again, pull information out of the database to put it on a report for one of the users that we talked about earlier. And so this is just an exercise you may want to try to work through to get more familiar with this, but it's not a requirement. I just put it out there in case you wanted to kind of practice a little bit at this idea of second and third dimension databases. And here's this is another one of those exercises. And this kind of brings up this issue of business intelligence, where we say it provides organizations with a competitive advantage. And we'll talk much more about business intelligence later on, but specifically what it is the application of analytics to data. And we pull in this whole concept of big data and data mining when we start talking about data. But the application of analytics to that to help identify relationships, whether it's relationships between financial data or between financial and non-financial data, that's then made available to management to better inform their decision making. And we'll get into this in much greater detail later on. So here we talk about how do we transform data to intelligence, and these are some examples. So if we're looking at data, we would be talking about the amount of a single sale of an Apple computer, which is an example of accounting data. If we're looking at information, using that same analogy, Apple's income statement for the year showing sales by type of customer would be information. So that really reflects information within context, right? It may answer something like, well, what did customers purchase last year? So it's contextualized. Information is contextualized data. And then when we talk about intelligence, we talk about applying this idea of analytics to that information and that data to help us through the identification of relationships result in predictive modeling that would then allow Apple, in this case, to predict the number of customers who will purchase a new product next year. And so again, this is just examples of how we get from data, and an example of that, to information, and that example, and then how is that used through the application of business intelligence to create predictive modeling and to specifically better inform our decision making. And when we talk then about business intelligence, we talk about shadow data, which consists of homegrown spreadsheets. And, there are problems with that, advantages and disadvantages. And the biggest disadvantage being that we then end up with a lot of spreadsheets and data outside the relational database spread all over the place on individual users' computers throughout the company with no version controls or perhaps poor version controls and people recreating what may be available on someone else's computer. Or we talk about another approach to business intelligence using business intelligence technologies, and these are really proliferating out on the market now, and we'll talk about this in much more detail later, but they are really software applications that perform data mining, analyze the data, and then result in some type of predictive modeling. Again, both of these, the ultimate goal of both of these is to better inform the user's decision making. And so then we talk about the fact that, these information assets, we invest a lot of money in developing systems to support our needs and our user needs, reflecting this information. We also, this information is really a business asset of the organization, and so we need to also safeguard that information. So people, processes, and technologies are three keys used to evaluate and resolve issues and capitalize on opportunities. And we'll keep coming back to this idea that we have people, processes, and technologies, and we need to take each of those components or each of those keys into consideration in the design of our accounting system. And so what you might want to think about doing is online, talk with your fellow students about how you can use the three keys, this people, process, and technologies, to address, or what we call triage, an issue or opportunity that you're currently facing. So if any of you have any sort of outside school or even within school issues going on and you would like to surface those through chat, then I encourage you to do so. Make this kind of an interactive experience, and perhaps through your networking and becoming aware of other students and where their specialties are and what their experiences have been, use that as an opportunity, use that chat function on Moodle as an opportunity to address or discuss some of these issues that you may be facing.